next talk will focus on the role of money in 2021 and how national banks are dealing with this. Ali Nejatmalarieh will lead the conversation about CBDCs with Thomas Moser from the Swiss National Bank, Jim Cunha from the Federal Reserve Bank of Boston, and Supnendu Mohanty of the Monetary Authority of Singapore. So I'll hand over to the moderator. Dear Ali. Ali, your turn.
Thank you, Nicolo. Greetings, everyone. Thank you for joining us today. I'm Ali Nejatmalarieh. I'm a finance professor and holder of Guthrie Banking Chair at the University of Wyoming, where I collaborate with our newly minted Center for Blockchain and Digital Innovations. I teach courses on blockchain and banking. So obviously the topic of CBDC is very near and dear to me, and I'm sure you share the same sentiments. I have the distinct pleasure of being your moderator for this session on the central bank perspective state of CBDCs, and I am extremely delighted to have a distinguished panel of central bankers with me to talk about the topic. So let me begin with going around and letting our panelists to do a brief introductions. First is going to be Thomas Moser from Swiss National Bank. Thomas, if you please.
Thank you very much, Ali. So my name is Thomas Moser. I'm an alternate member of the governing board of the Swiss National Bank, which is the central bank of Switzerland. Before joining the Swiss National Bank, I was an executive director at the IMF. I'm an economist by education, so no IT. I have a little bit of IT background because before I started studying economics, I started IT, but then I switched to economics. So I'm an economist. Thank you. Back to you, Ali.
Thank you, Thomas. Next, Jim Cunha from Boston Fed. Jim, if you please.
Thanks, Ali. My name is Jim Cunha. I'm the Senior Vice President at the Boston Fed. My entire career has been in payments, technology, and security. Right now, I'm responsible for working with the industry to reduce fraud in payments, but germane to this conversation, I also run our applied fintech research, building a research model, CBDC, with MIT.
Thank you, Jim. And last, Supnendu Mohanty from MAS. Supnendu, please.
Well, Ali, thanks for having me in this conference. I'm Chief FinTech Officer at the Monetary Authority of Singapore. My background, I've been in the industry for now almost 22 years, 17 years with Citigroup, and then I switched to public job as part of MAS, the regulatory body here. And my interest on central bank digital currency has evolved almost every month. And now I'm obsessed with this idea that if at all we can solve the cross-border payment to a sub-dollar cost structure, the way to do it is through a wholesale CBDC. And that's which drives me in this area of interest.
Well, thank you. Thank you, gentlemen. That was fantastic. So, as you can see for our audience, we've got unequivocally, experts from the field. We're passionate about a topic. I kind of look at this as a sort of an IPO party. Some of them have stuff that are going to be released very soon. And as such, that's what we hear. I'm trying to basically understand what are the pipelines look like and give a clear picture as to what the future might look like. There was a news about Switzerland and France starting a cross-border exchange through a CBDC system. So, Thomas, if you don't mind, could you sort of give us a rundown of what Switzerland has been doing and what's your perspective on wholesale and retail CBDC and everything else?
Well, thank you, Ali. So I might first say that the Swiss National Bank has not committed itself to issue a CBDC. So we have no official plans to launch a CBDC, neither a wholesale nor a retail CBDC. But as you just mentioned last week, we made an announcement about the cross-border experiment with the Banque de France. And that's part of our ongoing wholesale CBDC project. So wholesale CBDC means that's a CBDC that's not available to the public at large. It's only available to banks. So basically, we are talking about interbank settlement on a DLT with a wholesale CBDC. So we have been driven by a project from the private sector. The Swiss Stock Exchange has announced a while ago that they will launch a DLT-based digital exchange. They have been waiting mainly for the licenses, but they will go live this year. So while a lot of other central banks, including the MAS already a couple of years ago, did experiments with wholesale CBDC, I think what was special in our case is that we could test it on a platform that is ready to go live. So all the nitty little details are there. The banks are involved. We go into the core banking systems. We go into the balance sheet of the central bank. So it's really all the details are there. I think that's what makes this experiment a little bit special. We did finish the first phase. We published together with the BIS Innovation Hub, I should mention, a report that is available on the BIS website. And now in this second stage, we do some additional things, and one of them is exactly this project Jura that has been announced, which will involve two central banks, the Central Bank of France, the Swiss National Bank. It will involve two wholesale CBDCs, so a Euro CBDC, a Swiss franc CBDC, and then two banks, one domiciled in France, one domiciled in Switzerland. They will basically buy digital assets and then have them pay and exchange digital money to settle the delivery and the payment. So this is just starting this part. On the retail side, as I said, the Swiss National Bank does not any experiments on that. I have personally been doing some research on retail CBDC. What's a bit special about the working paper that we have published, I together with David Schaum and Christian Grothoff, is that we are not using DLT for our proposal, and that it is very strong on privacy, but it's a one-sided privacy, so only the payer is protected. It's basically anonymous, while the receiver of the payment is not anonymous. So that's what's special about that, but that's only a research project.
Perfect, thank you. And you know, you mentioned the BIS. There was a tremendous amount of wealth of information that they have produced on this topic in the last few years. And that kind of brings me to Jim. One of the unique aspects of the United States is that the Fed doesn't officially have any authority to regulate payment systems and, as such, fraud and all other things that could happen. So can you elaborate on the rumors that you've been working on MIT to cook up something, and what does that look like? What can we expect from a system that is not heavy-handed and rather more collaborative?
Great, thanks, Lee. First, like Thomas, I'll say that we have no plans for either piloting or production at this point. And I also mentioned these are my words, not necessarily those of the Federal Reserve System, but experimenting with wholesale. That was the same time that Singapore, Canada, and Japan and UK were doing work. And then we pivoted to the retail space last year. Some of the motivation, the People's Republic of China announced that they were doing a production pilot this year. Facebook's Libra, now Diem. And also there are some bills in Congress in the US that would have forced the Fed to build a CBDC. Those weren't successful, but it means we had to look seriously at retail. So what we're doing with MIT is research. We're building a research model to see if we can actually build something to scale that would work in the US. Many of the experiments to date have been smaller and had not actually been to scale. So we're building first the engine to mint the money, move the money, and store the money. So the basic component of a retail CBDC at the scale for the US. So tens of thousands of transactions per second with 5-second finality and resiliency of the platform. Our goal is to publish those results this summer and to create an open source license for the code. So we want everybody to understand what we're.
I think we have some technical difficulties.
I appear to be blacking out here, but after we publish our research, we'll be doing research into other policy options. Our chairman announced that we're doing a public consultation this summer with the industry to understand their perspectives on retail CBDC. So that's where you are with our research. Hopefully you got most of that.
Perfect. Thank you. So to recap for those who join maybe later, or the idea here, the way I understood is that the U.S. Is working on an experimental version of a CBDC with the help of MIT, and you will release the results of that experiment and the code that goes with it for public consumption, and simultaneously you start a sort of a listening session for public to see what the comments are. So that actually, that nicely brings me to my next batch of questions, which is directly to our Singaporean expert. Supmindo, the rumor is that Singapore wants to be the hub for fintech in Asia and perhaps the world. You've been doing some collaboration with JP Morgan, DBS, Temasek, and others. Can you tell us, what's going on and what's in your mind? What are the visions and where you're going?
Sure. Well, I will not claim to that we want to be we are the global hub, but yes, we are doing a bit of our contribution to this space. But let me give you a sense of the journey here. 2016, we started a project called UBIN, U-B-I-N. And the idea then was that as a central banker, we wanted to understand this whole DLT technology, central bank digital currency, and try to really see, is there a real value in understanding this technology and applying that to what we do as part of our central bank role. So we took a real use case. In this case, it was a payment use case. And we ran a series of experiments till last year over 5 phases. And at the end of that experiment, in fact, we published 5 reports. We actually open sourced our code, our programs, which were designed to show how you can design a payment system with digital currency and also use the value of digital currency for settlement, payment versus payment, or a payment versus delivery, both domestic and cross-border, under an experiment construct. And in 2019, I made a quote, I still regret that, saying that no more experiment, time to go to production. So there's a lot of pressure on me then that what do we do after this? So that led to this whole journey, which you are referring to, where Temasek, JP Morgan, DBS came together, took the UBIN code base and the learnings we had, and they launched a company called Partior, which will provide a market utility where if anybody issues CBDC or JP Morgan or any participant can use that platform to issue a central bank commercial bank digital currency, and they can use that digital currency to execute a better and efficient way of payment, or either it's instant atomic payment settlement or a delivery versus payment settlement, whatever the efficiency you want to get out of this new construct. But that's the JP Morgan story. In fact, I'm hoping they'll go a full-scale production by end of the year. And that's the shift from experiment to production. But I think the big question is, what are we really solving? And I just want to spend a minute here that why we think there is a real value in wholesale CBDC, and we are kind of obsessed with this idea. We took 3 years to connect, perhaps the only country in the world, which 2 domestic payment systems of Singapore and Thailand are today directly connected. And the reason we have to do it because we wanted to bring down the cost of cross-border transfer from 15-20% with banks used to charge. For every $100 you pay 15-20 bucks. Can we bring it down to $5 to $3? And it took us 3 years to connect 2 highly interoperable modern payment system, faster payment system, instant payment system, which went live 2 months back. Then we asked a question to ourselves: can this 5% be down to sub-dollar cost? And to do that, I think CBDC is an answer. Or in other words, can the central bank or can the commercial bank expose the ledger to a shared network and hence make the settlement atomic? Or can the central bank expose the ledger among themselves and build an instant settlement of the transfers? If we do that, we can actually bring down the cost of cross-border transfer with some stretch close to $1. If you can get that, I think we have truly achieved a long, outstanding, perhaps 50, 20, 100 years of problem of very expensive cross-border payment. And that's where we are focused on now.
Perfect. Fantastic. So, obviously that gives us a broad picture of where state of CBDC is in at least 3 corners of the world. And I think the other experiments are very similar. Now, one of the things that it occurs to me as someone who teaches this subject is that quite a lot of what the spirit of these efforts are is to speed up and reduce the cost of payment transfers, basically. And these have been the ideals for quite some time, ever since the first RTGSs were launched in probably 30 years ago. That has been at the back of mind of most central bankers. And now that we do have these real-time gross settlement systems almost everywhere, what's the difference? Jim, can you elaborate on how does a CBDC differ from what we have today? What advantages do we get, et cetera?
Well, I think as we've learned from the UBIT and Jasper experiments that it does work. I mean, you can, especially, I think the value is when you have other assets on chain. So when you're doing a delivery versus payment of a security, and have money on chain as well, I think that's the real benefit. I think both UBIT and Jasper's results were that a unit versus payment or for delivery versus payment, that's where you start to get value. So I really think the value is in connecting to assets. Or if you're a developing nation and you don't have an RTGS, then you can leapfrog the technology with either a DLT or a DLT-like system. So I think those are 2 examples where there's great value in the wholesale space. And if you look at the private sector with the Finality project, they see value. It's a bank consortium effort. They see value in building their own interbank network internationally, specifically for delivery versus payment of securities amongst those players. So even in the private sector, there's work in the wholesale space.
Perfect. Any other comments, Upnendo? You talked about the sort of a linkage between Singapore and Thailand, and one of the things that you said was that the systems are interoperable and whatnot. So, again, within that context, how do you see the difference between the CBDC system and what we have right now?
In fact, that's a great question. I'll say why, because when we question ourselves, can Singapore consider a retail CBDC? It so happened that as part of our fintech journey, we're also obsessed with this idea of putting an efficient public infrastructure to solve our domestic payment remaining challenges. We were faster payment in 2014. We could instantly pay each other, but still there was a cost of transferring domestic between account to account. Today, 2 years back, we launched a proxy system by which 2 account holders in Singapore can pay each other without knowing the underlying account details, by just knowing their respective identity number or the mobile phone number. 3 clicks, they can send transfer with 0 cost. I think you're asking us a very hard question now, that if you can transfer money using traditional rail at a 0 cost in 3 clicks, why you need a retail CBDC? I think the answer to that is, yes, there is a residual value also for Singapore if we ever stretch ourselves. But that's a residual value because we already automated our system. But many countries today cannot afford a highly efficient operating system that like what we have, because we could, a small country, and we can do it. Many large countries with large population implementing a highly efficient or faster payment system is very expensive. And I don't think they're going to get there very quickly. There lies the opportunity for a retail CBDC to be an alternate payment system by which, not through central bank liability, but still through a commercial bank in between, if they can issue a retail CBDC, two devices can exchange those retail CBDC over phone, almost like a real-time payment system, but you're actually exchanging this digital currency seamlessly. So there is example in Cambodia they did for Bakong, and they proved that they can leapfrog a RTGS system by putting together a retail payment system which runs on a DLT network and use retail CBDC issued by the commercial bank against the deposit which with the central bank. So in those countries, there are this opportunity to leapfrog. In Singapore case, there could be a residual value, especially if you want to merge higher efficiency product, especially if you want to merge against an asset transfer. Today, if you think about the asset transfer is in two steps. You first transfer the contract between A party to B party, then you do your payment separately. By doing digital currency, can you bring it all together in the same chain, which means you're settling ownership of asset transfer and the payment atomically, instantly. That's a remarkable way to add further efficiency to the existing processes. So this is where I think the value really lies, both for retail. Of course, I spoke about the wholesale CBDC. I think the big question is, will the commercial bank trust each other to bring the ledger out of their closet and put it in a secured shared ledger? If they do it, then we can see a real value of retail CBDC making the processes not only for transfer but also asset ownership efficient.
Well, thank you. That's fantastic. So it's I guess that brings me to Thomas. If I recall correctly, in the 2008 financial crisis, Switzerland almost became the ultimate lender of last resort. Everybody was scared. Everywhere else, they basically came and parked their money in Switzerland. So how do you see when we take into account the scale and the scope, when you take into account cross-country payments that come from various places and amounts that could varies quite drastically, how does a CBDC can help in as opposed to what we have today?
Well, I mean, you are mentioning now, Ali, a point that is that there could be a problematic issue for Switzerland if we would issue especially a retail CBDC, and we would have, of course, a situation like the 2007-2008 crisis where there is a lot of uncertainty, and we get safe haven inflows into Switzerland. Retail CBDC could potentially make it much easier to move funds into Swiss francs, which of course would then just bring extra appreciation pressure and would be a problem for the Swiss National Bank. But I guess there are designs possible where you could limit that inflows, but we have just not really thought that through yet. As I said in the beginning, we have been really experimenting with wholesale CBDC so far in a really domestic context, mainly driven by the private sector innovation with this digital exchange. And here I might add to what has been said before. The advantages of bringing money onto the DLT, which brings all these efficiency gains. One policy question for central banks is also, do you want a settlement to be in central bank money, or do you want settlement to be in privately issued money? And I guess that's more the angle where we came from, because the digital exchange, which is going to launch this year, they will launch with a privately issued stablecoin. And that's not a problem as long as they are not systemically important. But once an infrastructure becomes systemically important, then usually central banks would like settlement in central bank money rather than in privately issued money. So we haven't really been in the cross-border area so far. And what you just mentioned, the safe haven flows might be an issue with a retail CBDC. But as I said, there are these signs. I mean, you could restrict ownership to citizens, to residents, and so on, but we haven't really thought that through yet.
Thank you. Thank you. Very educational, gentlemen.
Ali,
Ali-
if I can add one point, Thomas. Another question that comes up relative to retail CBDC is there an implication relative to bank deposits? Will you see outflows from banks going into a retail CBDC, especially in a time of crisis? Here in the States, we have deposit insurance, but only up to $250,000. So, that's a policy concern that, most countries are thinking about as well. One thing we don't want to do is to create systemic risk or to create safety soundness risks for our banks. So that could be a design question, but it's definitely a policy question we have to think about. So it's more than just the cross-border component there.
So Ali, a quick point on what is I think all the policy central bank concern or any economist who follows macro policies, to me, they're broadly broken into three parts. There's an instrumentation challenges, there's a distribution challenges, and there's infrastructure challenge. A lot of the concern today central bank policymakers have raised is in the distribution challenge and how you instrument against privacy, inclusivity, security, and ease of use. To me, these are all design questions. And technologists can design product so that the fear central bankers have can be taken care. Ultimately, we have to make a choice in terms of how the future is going to interact with. All these concerns can be coded, can be programmed, can be controlled.
Great, thank you. Now, I guess I will take that and run with it just for a little bit. It is, a fact that thanks to our Italian ancestors, the Medici family, the modern banking has started. And so the roots of central banking actually have very private sort of sources, even Bank of England. So I'm not denying entirely that, private sector has led what has become the public policy, so to speak. So maybe we just have to wait a couple of years and see how all of this would transform the future. Which brings me to my next batch of questions. One of the hottest topics this last year, as I was teaching the course in 6 months, I saw it was DeFi. When I started put the course together, it was a little bit too fine, and by the time we got to the end of the semester, all I could hear was DeFi this, DeFi that. So Supinder, if you could sort of take us through this, what are the frontiers of DeFi? Where are we going? And specifically when it comes to CBDC, how can, if we would live in a world that everything is done through CBDCs, what would that future look like vis-a-vis DeFi revolution? Please.
Well, very difficult question, but I'll give my best shot. Well, to context it also, we looked at the future of financial service in our own way. And I think the world is heading to three things. There's a huge trend that finance will become embedded in the endpoint interaction digital world, which means if you are buying something from a health portal, or you are buying or you are traveling through a travel portal, your finance is done at the site of the portal, not going and logging to a banking system. So you're actually embedding finance in endpoint interaction in the digital world. The second piece of change, which we believe will be decentralized finance, and that leads to that big DeFi question. I think I tend to break that whole product or that design into four parts, if I can list out the four. One is it must have a trusted identity to ride on. It should have a set of legally recognized, regulatory-driven set of operational or regulatory or compliance code, which can be coded. And third, it should be using an on-chain a digital currency. And the fourth element is how do we make it interoperable between different instruments. So yes, as a product, as a new way of thinking of product, is highly exciting and sexy. But the real challenge for me is is the programmability of the rules, and do a policymaker, can they step up to recognize these rules being encoded into the smart contracts? Because smart contracts are neither smart nor contract. You can only call a contract smart if they do something outside the rules. So to make a smart contract to work, the rules have to be defined, this has to be recognized, and then becomes a contract will self-execute. Now, why I believe it is not a contract, because it's not a legal binding construct of when you to DeFi product exchange between two owners. So there are this evolving work going in this space, and I think the two big focus area will be programming, creating a set of rules which can be coded into program into the contracts, and building and finding out who should issue the trusted ID, whether it is issued by the country or the sovereign, or it will be issued by self they call it self-sovereign ID or other parties. So this is where I think we are now in this space.
Okay, thank you. Well, that's interesting. So the almost same question, I guess, again, to you, Jim. Since with respect to CBDC, retail CBDC, and your collaborative effort with MIT, and the fact that you're going to make the code basically public, how do you think this is going to help, perhaps, foster a revolution in sort of a payment-related, I guess, decentralized finance? Apps. I said that. I mean, that's a wrong word to use. But what's your perspective?
Well, first I'll talk about DeFi specifically. I think one thing we have to understand is that each jurisdiction is different. For instance, in the U.S., we have a national ID, a digital ID. We don't have the same regulatory regime as you have in many other countries. So to ask how DeFi is going to evolve is going to be different in different countries. So that's fundamentally first. And I think a retail CBDC, I think, is something that can spur a lot of innovation. DeFi itself is a very innovative way of transacting. And I think a retail CBDC can do the same in a couple of spaces. I think in DeFi, well, in DeFi, you generally have stable coins and other ways of having money on chain. But I think a retail CBDC can help with financial inclusion. We've talked about cross-border. And I guess the only statement I can make is we don't know what the future is going to be. And that's what's so exciting about this is, people thought at the dawn of the internet and the World Wide Web, it was only good for, sharing pictures. And now we've seen what comes after with innovation, especially in the private sector. I think the same thing will happen with CBDC. I think we'll see innovation that we can't even predict. So I would just say that I think it's something where, it can be revolutionary in different areas, but that's going to evolve differently in different countries.
That's fantastic. Very, very insightful. So I guess I'm going to segue this to Thomas. You're having a front window view of this, and so it's sort of a crypto valley. You're seeing a lot of things that are evolving and quite a lot of innovation coming. One of the things that to me always, or at least this past year, has been a question that the CBDC systems, especially those who try to incorporate DLT in their framework, is to answer the question of finality of transactions, having finality as opposed to a stochastic finality, which sort of like Bitcoin characteristic is. How do you think the engineering of these systems, what are things that they need to address in order to make sure that people have a date, have a time that they say, it's over, I'm done, and we can move on?
I mean, this is an interesting topic, and actually I've just seen a project that is soon going to be launched that tries to tackle this by basically going out. If you have a double spend situation, that you will be able to identify the double spender afterwards, and then can basically have some measurements and even block the coin for further transactions. So there are some people who think about technical solutions about this finality problem. But I think that is currently anyway a lot of research underway, looking both at the blockchain base layer. For instance, a lot of scaling efforts. I think that's one of the interesting things going on right now. You see it, for instance, with Ethereum. They are currently trying to scale with an upgrade through sharding and through other measurements, including changing the proof of work to proof of stake. But then you have a lot of other also second layer innovations, and I think the whole architecture of at least the public blockchains are now under scrutiny, and there are possibilities to make them more efficient and scalable.
Thank you. Thank you.
So,
Ali, if I could add one point on finality, just quickly.
Yes,
sure.
Most people understand that Bitcoin transactions are not, final and irrevocable. It's still probabilistic for about an hour. But also, I think it's important when we talk about DeFi in the comment about smart contracts is that people haven't studied the DAO, the Distributed Autonomous Organization, where a transaction was unwound on the Ethereum network because of theft. So I think those are areas that people really have to understand, that smart contracts are not necessarily smart, and finality doesn't necessarily mean finality.
All right. Well, thank you. Well, we have Nicolo back, so I'm assuming the time has come to answer some of the questions from our audience. Nicolo, please.
Good. Then thank you very much for these explanations. We could discuss this topic here even more and longer. And I would invite you now also to the networking room, where we will talk to or where the participants have the opportunity to talk to Thomas, Jim, and Sopnendo, and of course Ali. So thank you very much. I think that this is really an important topic that will also be on our agenda for next year. And please go now to the networking room, and we're gonna join. You can join them then.